I think there's so many older philanthropists and older business people that are retiring, boomers, that are wanting to give back. You're seeing a lot of that with these older generation. They want to give as much as they can from a monetary side, but mostly with advice and with guidance. So I think just trying to find those people in your life and build those connections. And I'd be one of those people as well that would love to build connections and help as much as I can.
Welcome to the Share the Wealth Show, where minority professionals can learn to escape the racial wealth gap and catapult themselves into abundance. Your host, Nicole Pendergrass, grew her net worth from being negative to multiple six figures. Join her on her investigative mission to expose secret strategies of the wealthy so we can all have the tools needed to build the life and legacy we were created to possess. Now it's time for the show.
Hey guys, so we're back again. This is the second part of the episode with today's guest. I need you, if you have not heard part one, go back to the previous episode and listen to that first, and then come back and join us here today. But you're not going to want to miss what they already said, because then you'll be lost with what they're about to say. But in any case, you don't want to miss you need to hear the whole conversation. This is why we split into two parts. There's so many nuggets. It's so juicy. Go back and listen to the first part. I guess multifamily is the next phase of what you guys are doing. Are you selling off those single families that you are holding for rentals now? Do you plan to keep those, sell them? Like what portion, percentage wise, I guess, of your portfolio now is the notes with homes that you don't own, but you have the notes on, versus what you kept for rentals on the single family side? And is the only commercial one you have right now the 12 unit, or have you done other commercial assets?
Yeah, it's actually still about 70-30 from notes to rentals.
Okay.
And we've done a couple other, the 12 unit, and then we have a 4-unit office building in north of Dallas, and then our office building that we own, which is in East Dallas. So we have a couple of commercial office buildings, but for the most part, it's still just rental properties. We don't plan on selling almost any of them. I think we'll look at some, and every year you kind of look at, what's underperforming, what area may not be appreciating, or it's a problem property. You can't ever get a good tenant. You have those properties where you're just like, okay, we tried our best. Area's not growing. The tenants, we can't get a good tenant. So you sell those off. But for the most part, we intend to just hold everything, continue to see rent growth in the DFW market, double digit every year for the past couple of years. And we expect rent growth to still steadily grow in the future. So we definitely want to hold on to our single family.
Okay. Market research. So how do you guys determine, is there anything outside of the normal market research type of metrics, job growth and rent growth, all the businesses coming in, all that kind of thing? Because your dad, like you said, is kind of contrarian and was going where people didn't want to go. So what did your company look for in a market that would be not what everybody else is looking at, but still make you comfortable to go in there and make a difference?
Yeah, I think it's a great question. He actually struck out a little bit. I gotta tell him a little bit. So after 2018, 2019, we were struggling a little bit to buy property in our same market of Dallas. So he actually tried to buy properties more in rural areas between Dallas and Waco. So he was betting on that you can find these cheaper properties in much rural areas, country towns, and then you could rehab them and do the same process, the note business with those areas, and eventually they would appreciate, and you get plenty of buyers. It's just like South Dallas. You can just repeat that process with the notes in rural areas. But it turns out there was a couple problems with that, and the problem was that there's just not the same pool. I mean, if you're going to have a ton of buyers in South Dallas because of the population and because of migration into Dallas. In other areas, if it's a ghost town, you're going to have problems finding a big pool of buyers. And also because of that, you're going to get less than good buyers, right? And so you get a lot of foreclosures. You have to take back the property. Also hard to find contractors. So he did struck out there, but I still think there's some principles to locating these rural towns that are on the path of growth, path of progress, right?
Mm-hmm.
I think that's where we can separate ourselves still. We just need to be, I think, a little bit more intentional about understanding what makes a town get from point A to point B. There's certainly a lot of towns that are starting to develop and grow. So I think that's actually where our next stage is at, in looking at multifamily. What are the cities in Texas that are still underappreciated, where you can buy now, and then you'll see this major development, major growth. So a lot of it is just talking to cities and seeing where they're at and their stance on development, their stance on building. Surprisingly, there's still a lot of cities that don't want to have new development. And so in those cases, why would you buy in those areas if you're not going to see that growth? On the other hand, one thing we also look for are places where there's a lack of supply, but other good factors. That could be schools. Our 12 unit is actually in an area where the city is having a lot of problems with building new units, but the school district is so good that everybody wants to move there. And so we have a 12 unit, one of the only apartment complexes in the city. And so we're able to drive rents up and be able to take advantage of a supply issue. Now, of course, we're always for, increasing supply, getting more people housing, but it's certainly something to look at, where there's supply issues as well. So I think, to answer your question, we definitely look for areas in Texas that we can expand to, that have some factors where we can see longer term development. And so even if we buy now and we know that it won't happen for a couple more years, 3 to 5 years, we can still hold it now and wait for that growth, and we'll see rent growth and appreciation because of that. So I think definitely looking for those factors in the cities where we can see long-term development is where we like to look at.
Okay. And you stay in Texas. Do you have goals? And I'm assuming, of course, that's because you're there, and you used to do California because you were there. So is that where you feel comfortable because you can go and you can create those relationships and be boots on the ground for your own properties? And do you have any plans to expand to areas where you're not physically located if you built up a team in some other markets?
Yeah, I think we definitely have plans to go to other markets. I don't know that we have any plans now to go as a team and manage properties in other markets. We want to continue to stay with our Texas properties and preferably North Texas. But we are looking at other markets as well, looking for partners that we can team up with and buy in markets with the same characteristics that we've talked about that you look for. Mm-hmm. And so, yeah, I think we love the southeastern part of the United States. We love states like Ohio, Indiana that are seeing a lot of growth as well. So we definitely are looking for great partners that we can partner up with and be capital partners, be asset managers for, utilize our experience with value add and with property management. So definitely, if anybody wants to partner up, we're interested.
Nice. Love that. You heard that invitation. So get on it. All right. So I guess actually I want to talk a little bit about the estate planning, because I think you did mention your dad was good at estate planning. What kind of stuff? Because it's one thing everyone has the ideas of how to build it up and what kind of active activity, if you're going to be an active investor, you're going to start a business, or what you're going to do to actually build that capital up. And reinvesting it is good because then that's a way for it to grow. But just like with your dad, like in his passing, he was able to pass things on to you, and then you're going to be able to pass things on to, your legacy, your other future generations. And how does that stay in the family and not get squandered? Because you have a good head on your shoulders, but we don't know what the future generations are going to be like, especially the farther away removed you are from the source of the like start and the impetus of the family business, the more you don't appreciate and respect it because you're too far removed, right?
That's right.
Like the people who will have come down the future lines who will have never met your dad, they won't take away those same values that you had. So what kind of estate planning? I'm always interested in how do people try to keep their future generations from squandering what they've built.
I'm not gonna give a ton of details, only because I don't want to say something that is not true, because it is very complicated. That's what I'll first say, that you should definitely contact an attorney, a state attorney, get that figured out, wealth planner, all those things. That's I meet with them actually. Even today, I met with a wealth planner to talk about some planning as well. So, I'm only 25, and I'm planning for my future as well. So, but he definitely planned. I mean, he took the time. It was extremely detailed family trust. I'll mention that was the the big primary piece was having the assets go to a family trust at his passing. So, having a detailed family trust with details on everything, you name it. I think that's extremely important, but also just surrounding yourself with great team members, great attorney, state attorney, wealth planner. If you don't have those people in your life, and also don't just go for the cheapest one, go for ones that are quality. It pays off, in the long run by meets and bounds. Is that the word, meets and bounds?
Leaps and bounds.
Leaps and bounds. Okay, leaps and bounds. So it pays off extremely from a dollar amount too, as far as tax savings and making sure that your wealth is not squandered, like you mentioned. So having that and making sure you get those trusts planned out correctly, making sure that you talk about the gift tax and all the implications of that. So allocating assets correctly, planning for who's going to take over and is also important from an operational standpoint. So we knew when he passed away that it was my job to get into that CEO role. So having all that planned out, I think, is extremely important. And I think just from my standpoint, besides all the financial planning and the asset allocation planning, I definitely want to, like you said, before we talked about getting a whole document in place to write that my future kids can look at and see all the lessons that I've gone through, record videos to be able to teach them when I'm gone. So I think that's just a small part, but I'm definitely curious to see, what else I can do to make sure that, my kids, my grandkids, they all fall in line as well.
Yeah. And that's the thing I've heard about too, is kind of, you can create your own, if you don't have enough assets to be like a family office, right? But you can create your own little mini family office by having the right team members on place, like having a tax and strategy planner and having the right like estate planning attorney and having the wealth planner and all those people like play those crucial roles, and even having them have joint meetings together, like have a joint conference meeting where everyone can discuss, because there are some things on the tax side that may not be optimal on the legality side, but you have to come to some middle ground that's beneficial for the bigger picture, So I think that's great. And I think trying to vet who's good and who's not, like that to me is, because a lot of people can talk a good game, but it's not until you start using them, you find out where there's holes in their story or where their experience doesn't line up exactly to where they were saying. And that might be after you've already lost money or opportunities and things like that. So was there any particular strategy that you and your dad used to actually vet these people who were going to help with your planning, your estate planning?
I think it all leads back to networking. And that's the beauty of the real estate community, I think, that we have now more than even when he was doing this, is that we have so many resources for networking and getting good referrals. And so I think just being close with people that you trust in the real estate community and getting their referrals is the best way to go about it. And that's what he did with our advisors as well. So he was able to talk to other similar investors that had the same amount of money and properties and assets. So, and just follow what they did, and smart people find smart people, right? So hopefully, I think that's the best way to do things, rather than just Googling, a state attorney. It's better to first look at your internal network now and see what referrals you can get from them. And I think the real estate community is so great with that. There's so many people that want to help. So I don't think it's going to be too hard to find some good people within the network.
Yeah, no, I agree. And what's funny too, though, like I know that getting a referral is preferred over just Googling someone yourself. But to be honest, there's a few times when I've gotten referrals and those referrals sucked. It's just like, come on, man. And I've gone back to look up who referred this person to me, because I'm just like, why did I? But you know what? I also have to admit, sometimes I get that referral from somebody who I don't know as well. So it's like, why did I take a referral from her? I just met her. Like, she seemed nice, but how do I know why she was referring this person to me? You know, like, she might think this person is good, but maybe she never even used it. I don't know. So I've just recently had that experience.
The more friendships you build, then you can build those trust.
Yeah. And now you could trust the referral. So lesson of the story is, don't just take a referral because it comes from someone who's nice that you just met. Make sure you actually have a relationship with the person. You can trust any referral that they give to you, because they know they're not going to give you a crazy referral. So that was a lesson learned the hard way.
Make sure that person that's giving the referral is doing well with their business too, right?
Yes.
And they're successful, because like I said, you want to attract the successful people in this business.
Exactly. And then once you find that one good team member, they probably have referrals to the other professionals who are actually good. So then you don't have to go back to your network. Like, you could get a referral from that professional because they all hang out together.
Exactly.
And do Zooms. Okay. So this was great. Like, is there anything? Okay. You know what? I do have one last question. So with all of your journey and story and everything that you learned from your father and taking the reins and running the business now and kind of keeping that legacy alive and all of that, you've seen a lot of people, I guess, from different various backgrounds in economic levels, and from the people that you're helping at the lower levels, and the people that you're networking with, or people who you want to partner with who might have be further ahead on their journeys or whatever it is. So I know you've seen like a range and networked and helped and been in contact with a range of different people. For the people who maybe don't have that family member, they don't have anyone they know who's doing real estate or has this bigger mindset, what do they do? And I know networking is key and education is key, but within that realm, like, what are your suggestions from what you've seen has been maybe mindset blocks that people have had to their own, journey and elevation? Or, what I'm trying to say, like, how can people get involved? And maybe if they don't want to do 50 properties a year or grow as big as your company has at this point, like, how do they even just get started with that one step at a time so that they can slowly build momentum into creating some type of generational wealth plan for themselves and their future family?
Well, I first should say that I'm the least qualified person to ask probably about how to start from scratch, given my privilege. But from my dad's standpoint, what did he do? And of course, it was a different time. But he came from another country with very little, and he was able to figure it out. And so, what did he? I think the biggest things he did from a mindset standpoint was that, like I mentioned earlier, he outworked everybody. I think at the very least, I couldn't speak too much on, and especially with the housing market now, like how does somebody that has no experience, no capital, how do they start building generational wealth? I mean, it's a tough question that I'm definitely not prepared to answer. But I think at the very least, there are definitely people out there that want to help, including myself, help people that are trying to get out, are in lower income neighborhoods and want to get out and want to grow, want to help their neighborhoods grow. There's a lot of people out there that want to help them. There's a lot of programs out there. And so I think just getting involved as much as you can, and then following up with a lot of action and providing value to other people and providing value that is hard to replicate too. So figuring out where is a niche that people need and how can I make myself indispensable? It's always been a big thing I've seen from people, and I've seen it from people that I've met in these neighborhoods that I've hired for work or for contracting jobs as well. People that have come from very poor backgrounds, but have shown a skill that is very hard to replicate and also very hard to find. Combine that with a good work ethic, integrity, honesty, and you have something that you want to keep that person and you want to provide value to them. And so in my case, especially with a lot of the programs that I see, the ones that I see that are most successful in these, whether they're incubator programs or whether they're programs to help entrepreneurs in lower income neighborhoods, the ones that I see the most successful are the ones that really put their all into these programs, really put their all in following up and doing all the work that's required. And from there, the more you get connected, the more work you do, and the more work you put in these programs, people want to give to you. People want to mentor. I think there's so many older philanthropists and older business people that are retiring, boomers, that are wanting to give back. You're seeing a lot of that with these older generation. They want to give as much as they can from a monetary side, but mostly with advice and with guidance. So I think just trying to find those people in your life and build those connections. And I'd be one of those people as well that would love to build connections and help as much as I can. So that's all I can say from that. I really don't have as much experience, but I certainly know that there's a lot of people out there that want to help.
Yeah, I love that. And if you did not hear that clearly, people, he said he wants to help you. Reach out to him. Like, don't be too proud. Like, there's people who are out here who are ahead of their journey and they're doing great things and they want to give back and they want to create impact. And when you find those people or you hear those people, like, grab on, take them up on their offer and see how you can create and add value to what they're doing. And maybe at this point you can't, but you can learn the skill. Like he was saying, learn how to become indispensable, and it's not impossible. You just got to put in the work and have the work ethic, but then also work smarter.
That's right.
So there's a lot to go with that. Wait, don't go yet. Have you been looking for a way to get started in real estate investing, but you just don't know how? You need the Launchpad. It's brought to you by my company, Norvest Holdings. And the Launchpad is a free guide with a ton of resources I've compiled to help you invest into your first real estate syndication. It includes terminology, book resources, video explanations, all the information that you need. Don't know what a syndication is? I got you covered. How to find a good operator, how to even tell if a deal is good or not without having to know how to underwrite it all. It's all in there. The Launchpad is designed to help launch you into the next stage of your investing career and get you invested into your first multifamily syndication as a passive investor, meaning you can be a landlord and own a piece of a large apartment building, but still go about your day-to-day life without having to stop and learn every single detail about what's under the hood and how it all works. The link to the guide is in the show notes. Make sure you sign up today. Again, this is a free resource and guide. And if you have any questions at all, please feel free to reach out to me. Now let's finish up the show. Okay. So, oh my gosh, this conversation was really good. I feel so blessed and honored to hear about your dad's story and that whole journey and how you're picking up the baton. And your story, you're very humble, but it's nothing to be sneezed at either. Whether you think you came from privilege or not, like, your mindset is fantastic. You're taking up right where your dad left off. I know he'd be more than proud of you. You have a great head on your shoulders and, you want to give back. And that is very commendable. And you're creating your own, like, it's already been started. You're blazing your own trail. You know what I mean? So
I appreciate it.
Yeah, no, it's very, and that's not just because we're recording. I really feel that way about your story and what we've discussed and so far. So I love it. But now we are actually going to wrap up, and I'm going to ask you the last few questions I ask every guest.
Okay.
And so, first question. Warren Buffett said diversification is protection against ignorance. I take that to mean people just invest in whatever or invest in diversified assets because you don't really know what you're doing to kind of hedge your down risk. But what is your take on that? Because some people think that that's a good thing or a bad thing. I don't know. But what do you think about it?
Well, I think diversification is a result of no one knowing what will happen. And that's what the ignorance is, the ignorance of what the future holds in any industry. And so if you diversify, you mitigate your risk of the ignorance of what will happen in the future. None of us know what's going to happen with real estate. As much as everybody likes to say that they have the answers, we don't know how the market's going to turn out in the next couple of months. Crypto, the same thing. You name whatever industry you want to name, you don't know what's going to happen. And what pandemic is a perfect example of how things can just go crazy without any foresight. So I think it's a great quote because it speaks to the importance of diversity. And I was actually thinking about that in the sense of, well, if I know that real estate is going to do so great, why don't I just put everything into real estate, put everything into this one asset class that I know is going to grow? I'd be fine. But then boom, another pandemic or whatever catastrophe happens next, ruins your whole bet. I could not have foreseen whatever that would be. So I think it's important, even if you're so sure that this one bet is going to pay off. Everybody wants, probably last year, wanted to take all their savings out and put it all into Bitcoin. And we're seeing that maybe that's smart, maybe that's not. We'll see, right? We don't know. So diversity protects against that.
Yeah. Okay.
Diversification, I should say.
Yeah. I knew what you meant. Okay. Next question. Have you ever played Monopoly?
Yes.
Okay. Baltic Avenue is, one of the cheaper properties versus Boardwalk, most expensive. What's your strategy for winning the game? What property are you buying first and why?
Well, I think just you can tell from my experience in real estate, my dad's experience, we're Baltic buyers over here. We prefer to buy up the whole block and put our hotels up and all that and have the rent go in. I think in that sense, right, you're able to have lower capital investment and potential for higher return, and especially if you buy all the neighborhood, you're able to double that and triple that. So we're Baltic buyers over here.
Baltic buyers. I love that. I haven't had anyone say I'm a Baltic buyer. That's a strong statement.
I'm buying that too.
Yeah. Oh yeah. Yeah, you are. But that's a strong forefront. Like, that's exactly what you guys have been doing in your business. So it's really like a real life example. Okay. So actually, another question. What's one thing that you would need in your business today that would catapult you to the next level of wherever you see the business or yourself personally heading?
I think it's really systems to scale. We've been more of an operations focused business in that we have our investment, our single family, pretty simple. We're going to do this, and this. That's our process. We're going to manage it. I'm going to be the CEO managing this operation. And like you said, working on the business has not been enough of the forefront. How do I get out of the business and focus on scaling it, growing it? And then also, I think, like you said, getting into other markets, expanding our ability to be in a lot of deals. I think we saw that in the DFW market, how hot it was and how hard it was to buy, that we were very limited because that was our only market that we knew. And so having those partners, networking has only been really a new thing for me over the past year and a half. So I'm still new to it and building partnerships, but it's already transformed my outlook on investing. And so I think just capitalizing on that, growing that to build more opportunities to partner and scaling our business to be able to take on those future deals.
Okay, great. I love it. All right. So, wow, that's a wrap. Thank you so much for being with us today. How can people want to reach out to you? You offered to help extending that, that hand, but how can people reach out to you? How can they learn more about what you and your businesses are doing? Maybe someone has resources for you. You never know who's listening. What's the best way?
Yeah. So I think, our website is webcityproperties.com. That's our company, Web City Properties. I don't know the story behind the name. My dad he liked that. So webcityproperties.com, Jordan at webcityproperties.com is my email. Always look forward to talking to anybody and seeing how I can provide value. I think that's our big focus, is provide value to as many people as possible, and then opportunities will eventually come. So certainly welcome to talk to anybody.
Exactly. And I love that. Opportunities will come, just provide value. Wow, this was a really great conversation. I feel like I know you so much better now. But yeah, I definitely want to continue this. I'm glad this is the start of our relationship. I know this won't be the last time we talk. And everyone else, reach out to Jordan if you have any questions, if you need assistance with anything. It sounds like he is more than willing to help out. And that is a wrap. We will see you at the next episode.
Thank you.
Did you love this episode of Share the Wealth Show? Be sure to connect with Nicole by following her on LinkedIn, Instagram, or Facebook. If you picked up any of the gems that were dropped by today's guest, make sure you not only put them in your bag, but if you know of someone who would benefit from this information, don't keep it to yourself. Share the wealth and make sure to leave us a rating and review. We'll see you for next week's episode. Subscribe so you'll be notified.